Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is a it's a Tuesday, but boy, we got mauled today. Boy, it's really looking like the bear got out of his cage, and it's mauling some tech stocks. I certainly got mauled a little bit today. I mean, it's kind of ugly right now. Apparently, Janet Yellen made some comments, and the market went down. So congratulations to the Federal Reserve for basically basically killing the market at least for today. So, man, whatever. Anyways, the market is really selling off bad, and so what I've done is I've taken evasive action, of course, and I have moved into bear trades, and I basically put one up just for everybody that's on the action trade alerts. We did one on Datadog, and this is looking like a real dog. It's going to be reporting earnings basically in 2 days, and the consensus out there is it's looking not so good for Datadog. Hopefully, we're going to benefit from that using a bear put strategy, and of course, that's available to anybody that is signed up for the action trade alerts. It's super easy to get on that. Just wanted to kind of put it out there for everyone. You can get onto the free action trade alerts. Very easy to do. All you have to do is go to www.dallastradingfloor.com. And oh, wait a minute, my browser has lost connection. Oh, goodness gracious. What is up? What is up? Let's see if I can get that back up. I got it back. Had a momentary glitch there. It seems like it's glitching up all the time. But anyways, back to the free trade alerts. You can get those very easily just by going to www.dallastradingfloor.com. So easy to get those on that list. And I'm just going to put up the slide here. Just super easy to get on that list. Just go to www.dallastradingfloor.com. And by the way, for everybody that's looking on TikTok, we're broadcasting on YouTube. I'm going to show all the charts and everything there. But if you also want to get on the action trade alerts, very easy to do. You can go to my profile, hit the link, and be taken right to the page. Just need first and last name and a email address, and you can be on the action trade alerts. So without further ado, kind of let's get into the slides. It's it's looking pretty ugly. It's looking pretty ugly out there. I have to say. So basically, what's going on here. Let's see if I can. Oh, goodness gracious, I'm having issues here. Well, there we go. Okay. So let's see if I can. Let's see if I can change this up. All right. So there we go. All right. So basically what's going on is apparently, and I wasn't around for this, but Janet Yellen made some made some comments, and basically that sent the Nasdaq Composite down 2.3%. And basically it's testing its 50-day average. So this is not looking good. Kind of want to show you the the recap here. We're down 2.29% on the Nasdaq, and of course we fell through that very key level, that 14,000 level. And as you can see, it just kind of takes a swan dive there, and it's right up below the 50-day line. So maybe we have topped. I mean, we were looking at record levels of debt on on the margin debt, so that might that might have been a factor. We definitely have the S&P 500 is down, the Dow is down just slightly, and the volume is up. So what this is kind of saying here is that, as you can see, it came right down to that 50-day line, and that's a very key line. Hopefully we'll get some support on that tomorrow. But if you look at this relative strength line, it's pointing downwards, and that does not look good. So maybe we have topped. So we've got to maybe think a little bit differently here. And one of the ways I think I can help people to think a little bit differently is with bear put spreads. And these actually do better when the market falls. And you can take a look at this. We have, of course, we do put out quite a few of these for our Discord member, and of course that's all included in that. But I have been putting some out in sort of in front of the paywall, just so that people can see them. We did a double meet on. We did a bear put spread yesterday on Beyond Meat, And basically, this should double your money in about 29 days if everything goes right. And of course, this is the double meat bear put spread. And you can take a look at this by going to https://www.vinny, vinny.com/u/Dallas Trading Floor, and just to take a look at that one. And by the way, if you're on the action trailers, I put out a very nice bear trade on Datadog, which is going to be announcing here pretty quickly. So in 2 days. So hopefully we will be able to make some money that way. I'm certainly not making money on my Apple. That was stinking up the joint today. Well, yeah, you got to take the good with the bad sometimes. And well, we're kind of there. So let's kind of get into it with some of the questions, and maybe people will take a look. Thoughts on Tesla and MP? Well, Tesla, unfortunately, is it's just not looking good. I mean, yeah, I wish I had better news for everyone. I'm definitely, I'm definitely a Tesla bull, but as of late, it just hasn't been operating the right way. So let's jump on over to the Tesla chart and kind of take a look and see kind of what is happening, because this is a very key stock, especially in automotive. And I think so goes Tesla, so goes the rest of the automotive market. Here we go. We're popping right over to that. And this is Tesla. All right, there we go. Okay, so basically what's happened is today we fell below the 50-day moving average, and that is not good. It still has this very strong relative strength at 93, but unfortunately, the relative strength line, and this is what I really look at, is pointing downwards. So not the kind of thing I'd like to see. Hopefully I'm going to get my pen out. There we go. Okay, so we're pointed downwards on that relative strength line. So, it's just not a good time to be buying Tesla right now. I'm afraid it's just not. We're going to have to see if it gets support at the 50-day moving average. So what I'm going to do is I'm going to set an alert at the 50-day moving average. And right now, that is right here. Let me get that. Let's see if it'll let me. Oh, goodness gracious. There we go. Okay, so let's look at the price of the 50-day is at. So this is the next really key level for Tesla at 571. So what I'm going to do is I'm going to set an alert for 571. And, we're just going to put it right there, because that is kind of where Tesla right now is trending, unfortunately. There's a lot of overhead supply on Tesla, and it just looks like we're trending down. So at least in the short term, unfortunately, I think Tesla is going to go lower. So here's my advice out there. If you're still holding Tesla, and I'm not, because I basically sold out. I used my 7% rule, and I sold out basically as it started retreating here the first time, and I haven't been really back in because there hasn't been really a good buy point. But if you're down more than 7%, I would consider closing your shares now. Sell now, and then possibly if we get a bounce off the 200-day line, that might be another opportunity. But here's the thing about Tesla. Tesla was the number one stock last year, and it moved up in price tenfold. So very unusual, very very unlikely that we're going to see that at least for a while. I still am very very bullish on the stock, but I don't want to own it right now because I do think it's moving lower. So that's something that we have to kind of look at very very carefully. Also, let's look at MP to see if see what we can see there. So let's take a look at MP. MP Materials, and this is rare earth mining. Again, this stock is not looking good either. It's basically earnings in 2 days. I think what I would do if I would had a profit in the stock, when I'm not in the stock, by the way, I would consider selling before the earnings. The earnings are going to be in 2 days. This is because we're starting to, it might do well on the uptrend, and it is in a very good area, mining and metal ores. It's you probably could hold this one through earnings, but I would be a little bit careful in this market. It's just a tough market. Here's the strange thing about this market. Normally, if a market were in decline, we would see everything in decline. But that's not the case because there's so much stimulus money in the market. What's happening is that the money is coming out of the tech sector and it's moving into some of the other sectors. And I kind of want to show you this on on a chart. So what I'm going to do here is I'm going to move over to the sector rankings and kind of let's look to see kind of how they're trading. Well, currently in the market, the number one sector right now is the oil and gas royalty trust. And the second best sector in the economy is the oil and gas U.S. exploration. And the third is the oil and gas Canadian exploration. So what is this showing us? Well, what it's showing us is that people are taking, the big funds are taking a lot of their profits in the, they're taking their profits in the tech sector, and then they're moving those profits over to the oil and gas sector. So really what we kind of have to follow along, just like a little minnow following along a whale. So what I'm trying to do is I'm trying to, buy puts, and I do this with spreads in the tech sector, and then I'm trying to go and move to a long situation, a call situation in the oil and gas sector. So I want to kind of show you how the U.S., the number 2 rated sector. Now this is what's happening. Many of the big funds are basically saying that we're going to have a lot of inflation, and it looks like oil is probably going to go up in price. So what are we going to do here? Well, what we're going to do is we're going to buy hard assets is what we're going to do. So we're going to sell some of the hype stocks, the Beyond Meats and the Datadogs and those kind of stocks that have just zoomed up. And we're going to take that money and we're going to move it over into the oil and gas exploration area and the oil stocks. That's sort of been where it's going. So you'll notice, and I kind of want to show you this. These are the stocks that are in the oil and gas exploration sector. Number 1 is EOG. Okay, now number 2 is PXD, which is Pioneer Natural Resources. That's going to be going through earnings tomorrow. I mean on Thursday. So this is the one that if you want to buy something into earnings, this is what you want to consider. If you'll notice, the relative strength line of Pioneer Natural Resources, which is in the oil and gas exploration group, number 2 out of 197, is 84. And I want to show you, by contrast, what Tesla is in. So Pioneer Natural Resources, 84 relative. Pioneer Natural Resources, 84 relative strength. Let's take a look at Apple. Apple got hit really hard today, and of course I have Apple. As you can see, 53. So what's starting to happen is this little line is showing that the relative strength of Apple is decreasing on the market, whereas the PDX, that one we just looked at, this is in Pioneer Natural Resources, that's increasing, as you can see, 84. So it's moving up. So here's what's happening in the market. There is a sector rotation going on from the techs. People are selling those techs, and they're buying into certain other groups, and these groups basically are these groups. So I want to kind of look at kind of the top 20 and some areas where we can possibly look for potential things to buy. One of them is the metal and ores group, which is which is very good right now, and that's worth the investing in. Home furnishings, believe it or not. I mean, this is one I would never have invested in normally. Regional banks. This is a good, relatively, you're not going to make a ton of money in regional banks, but they're doing well. Oil and gas, metal products, retail leisure products, steel and specialty alloys. What I'm saying here is that what we're seeing a movement into the beaten down areas of the market, the places that just couldn't get any love in the last year or so. They just couldn't get any love at all in the market. What's happening is people are selling off the Teslas and the Apples and those stocks, and they're moving into the other ones. Now, what's amazing is I just closed a spread that I had on Amazon, which which announced killer earnings, and yet it is down as well. I want to show you the chart for Amazon, AMZN, and this is essentially what's happening in the market overall. Amazon announced absolutely tremendous earnings, as you can see. It was up 215% in terms of their earnings. But immediately afterwards, we had a sell-off, and the reason is because the big funds are taking their money, they're taking their winnings that they've made on Amazon, and they're moving them out of Amazon into kind of what I consider more hard assets. Because they know that with these tax increases potentially, and the lack of the change in the treatment of long and short term capital gains, it's very likely that this is going to affect the overall price of assets, especially in the tech area, because they've inflated so much. So we're starting to see even with Amazon's tremendous numbers, it's kind of stalled in this consolidation range. Now, do you think is it going to go down? I don't think so, but it's not going to be doubling as quickly as it's been. Let's take a look at a stock that may be doing much better, and that is Cleveland Cliffs. This is a steel company and has benefited from from being so beaten down. They just went through earnings, and they beat earnings tremendously. Their sales were up almost 1,000%, and their profits, and this is the key, their profits were up 775%, and it just moved very, very nicely out of that. So, as you can see today, Cleveland Cliffs just kind of rocketed up there. What's happening is that the big companies are starting to move their asset. The big funds are selling the techs. They're moving into the steels, the oils, the kind of what I consider the old economy stocks, and that's sort of what's happening. So I just kind of wanted to really kind of go over that, and I'm going to show you also, as I said, if you're on the action trade alerts, and of course that's very easy. All you have to do is go to www. Dallas Trading Floor, and we have on that we have the action trade alerts. And I'm going to show you how I'm going to try to give you some alerts at how I'm trading some of this this movement, and that's really easy. Just go to www. Dallas Trading Floor and sign up for the free action trade alerts. And of course, if you're watching on TikTok, you can possibly goodness, I have I have an issue, another issue. Oh, there we go. Let's see if I can get some power to my iPhone here. That's why it was not. There we go. It was not working as well. There we go. I think we're back now with some more power. But if you want to subscribe to the free action trailer, it's super easy to do. www.dallastradingfloor.com. So let's go to some of the questions, and thanks for everyone holding on. It's a strange time. Okay, so let's. We talked a little bit about that. I'm heavily down in some of my stocks, more than 40%. Woo, wow. Should I cut losses? Absolutely. You should absolutely cut your losses now. Now is the time to not be. You need to. Now is the time to cut losses. I know this is going to be so painful. And this happens when the market changes like this. And really, what triggered this, unfortunately, is what our Secretary of Treasury said. So cut your losses now. All right. So this is kind of really what I want to be very, very clear on. We need to start cutting our losses now, because there will be opportunities, but we have to be in a position where we have some cash. So, it's just the thing. Okay, interestingly enough, Shopify reversed, or is it a bull trap? Now, here's the problem with, and this is the problem with shorting stocks directly. It can be very difficult because you have what they call these. They have They have they have short squeezes. Okay, so if a lot of people are shorting a stock, that can be a situation where it can be very very detrimental to to short a stock. That's why I recommend not shorting directly, but using bear put spreads. And this is really what I covered in some of my stuff. Of course, I do have several of these trades. I put out the one today on I took yesterday. I put out one on Beyond Meat, which is doing quite well, and then I have another one that's setting up for Datadog that I'm doing, and I'm going to try to produce. I'm going to try to see if I can produce some of these each day. Well, here's the thing. Here's the thing about trades like that. You protect yourself using the puts rather than doing a full on short, because you can get these momentary where they come back and they pull up. No. So the question is, did it reverse, or is it a bull trap? Right now, I think it's a bull trap. Not that everything's a bull trap, but what happened was it came down to the 200-day line. That I do typically will not buy anything below the 200-day line, and it bounced. Well, unfortunately, I think it's gonna bounce, but it's gonna go lower. So what I think this is what they call a dead cat bounce, and it's bouncing, but I think it's gonna start to sell off. It's got a relative strength of 46. Unfortunately, that's just Shopify. It was such a great stock, and as you can see, this is the last. This is the last. This is the monthly chart. It's just been so tremendous. But right now, I think with all the tech stocks, we're starting to see them sell off, and you just don't want to be caught. You just don't want your profits caught in this situation. Best thing to do now, if you're down more than 7%, cut your losses. That's the most important thing. I'm not trying to be excited here. This is why I always recommend the 7% rule. You set that stop loss in, and I know it's painful but this can help preserve your capital. So if you're down now, I would very much consider uh, cutting your losses. At least at least you can always come back into the market. That you can always do that. But be careful. Be careful. So please tell us what's going on with ARK. Okay, Kate. Thanks for that. ARK is going to be down hard. I mean, this is because you know the thing about this is when times are good in ARK, it's going to be great, but it's too concentrated for a lot of people. So that's part of the reason why we're seeing this movement on ARK Invest right now. It's pulling back, and it touched the 200-day line. I want to look at the daily chart here, just kind of evaluate it. Yeah, you see what happened is it fell, it hit the 200-day line. Unfortunately, this is probably going to do more. There's probably going to be more damage this week. As you can see, the amount of selling pressure is increasing. This is the volume that I'm looking at here, and the price is going down. So this is not the kind of situation that you want. You don't want price going down and selling going up. So here's what I recommend if you're in the ARK funds right now. I would consider, if you're down more than 7%, I would consider liquidating and seeing what's going to happen. Because as you can see, this relative strength line is pointed down. Okay? So let's see where we could go. If we liquidated here, where could we go? Where is there cover? Well, I do think that there is some cover in some of the oil stocks. I think it's SPX is the oil. Let's take a look at an oil ETF called Gush, Gush, and this might be a place that you want to go. As you can see, this is the inverse of this is the S&P 500 oil and gas bull 2x. This is doing relatively well. Now, I wouldn't recommend this for everything, but this is trading very nicely. It's held after hours, and it's moving in the opposite direction of the ARK fund. So that's kind of where I'm looking to possibly place to move to. Uh, so I think with the ARC funds, if you're down more than 7%, I'd consider getting out because it's probably going to get worse before it gets better. Let's look at EMU. Of course, that's Micron, and the chips. This was sort of the last place that I expect. Uh, there's been weakness in the chips. I had a bull call spread on this one. I had to close it because it was going against me. This was about a week ago. I love this stock. We have a chip shortage right now, but right now it's just there's a sell-off in the Nasdaq, and you just unfortunately it's not a place to be, at least for right now. I'm not saying forever is a long time. I mean, things change very quickly, but right now, if you're down more than 7%, consider closing your position because that is going to probably help you more. Now, Neo, this is the other stock that I think is a potential short. Now, I'm not shorting this one, but I may do a bull put spread on it because, as you can see, it's just about getting ready to crash through the ceiling. We're basically standing up in the attic, and we're kind of rooting around in the attic, and we've just put our foot on the drywall, and we're just getting ready to fall through that floor. And that floor, of course, is the 200-day moving average. So it's not looking good for Neo. This is the trend on Neo. As you can see, this little blue line here. This is the trend versus the S&P. So money is coming out of this stock and going into other places. And right now, unfortunately, it's trading down. Neo, I believe, is going to, let's see when it's going to announce. Okay, it's just come through earnings. Has it just come through earnings? Okay, it's announcing on August 11th. I think the trend when this one is down. I don't think I would want to be in, even though look at their sales; they're just up tremendously. This shows you that there's a change in the market. Their sales are up 529%, and the stock is down. And there's a disinvestment out of this sector. So you just got to be super careful. I wouldn't be in Neo right now. It's just not the place to be. Thoughts on triple leverage ETFs for the S&P 500? Kamal, I would be very careful with this right now because right now we're sort of at a tipping point. You don't want to leverage too much in this environment. What you want to do is you want to move to the sectors of the economy that are doing the best in terms of investment, not necessarily in terms of sales. Right now, in the economy, there is a movement to hard assets and commodities. Okay, this is because of the change in the administration. It looks as if we're going to get a bout of inflation, and unfortunately, I'm old enough to remember. I'm old enough to remember Jimmy Carter as president, and when I started my career. If you went out to get a home loan, it was about 12.5%, and this was really due to a lot of factors, but it was basically the same kind of things that they're going to try to do again with this next administration. They're going to cause a lot of inflation. So here's what happens in the situations like that: assets in growth stocks go down, 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 even if they're producing fantastic things. In commodity stocks, on the other hand, oil stocks, uh, uh, grains, that kind of thing, they go up. So the price of cattle feed is going up. The price of food is going up. The price of rent is going up. So if you'll notice, everything that's sort of what I consider more hard assets, like if you go and you buy commodity futures for corn, you could conceivably eat the corn, but you can't. Some of these, the software you probably can't eat. So that's kind of the way it's going. So there's been a lot of change. A lot of it, is due to the different situations with the governments, and so there you can do very, very well in an inflationary economy, but you have to switch over from your thinking on growth stocks. You think, and we've done also well on growth stocks. At least I have. And I know that a lot of people out there have done very, very well on growth stocks. That's just going to change. We're not going to see stocks probably, at least for a while, they're not going to double and triple like they have. I mean, Tesla's performance last year was phenomenal. It's sort of a once in 20-year event. I was fortunate to get in on that. So was a lot of the chip stocks like NVIDIA. I just don't think we're going to see that going forward. and we're going to see more. It's going to be harder to make money, but there are places to make money in the market, and one of those is in the commodities and things like steel, things like that. That's going to be where we're going to see. So, it. Long story short, I wouldn't do the double triple leverage on the ETF. Let's let the dust settle. Right now, my preference is to get into a very strong cash position, and then do start start moving against the stocks such as Beyond Meat, and again that's down, which is up for me, and that kind of thing. That's the way to start doing it. So get into cash, get into safety, and let's start spending a little bit smaller ball. But the problem is that right now I would be at least 50% in cash. I'm about 75% in cash right now overall, and that's just been the way. That's just been the way it is. I'm having a little bit of issues with my iPhone here, so let me just plug that in. Yeah, it's a battery, as you well know, as everyone well knows on those things with the battery, that could be an issue. So that's my take on it. Is it time to short Tesla? No, it's not. Don't short Tesla. Here's the problem with shorting Tesla. A lot of people have had bad experiences shorting Tesla. There's a lot of. I wouldn't short Tesla right now. What I would do is I would concentrate on the bear put spreads. I really would. Let's look at thanks, Jeet. Let's look at Apple, and of course I'm heavily in Apple, which is I basically what I did today is I was in covered calls on Apple because I have a pretty big position in it. I'm basically buying back my calls, and I'm looking to roll them a little bit longer. I do think we're going to see some recovery in Apple, just because it's such a big stock, and I think it fell so much all the way down to the all the way down to the 50-day line. But I'm going to start trying to move my position out of Apple, just because I think that I want a little bit less exposure right now. It looks as if we have a beautiful cup with handle base pattern. This is an ideal pattern to buy off of. I don't think Apple is done yet. This didn't have the big run up after the 4-for-1 stock split in August of last year that Tesla did. So our valuations are still relatively good. But if you take a look at these selling bars, there's a lot of selling activity going on. A lot of people are taking their profits and they're moving them elsewhere. But we still have a 77 checklist. I'm still in Apple, but I'm going to be reducing my position. I mean, that's really sort of my my deal. All right, PRPO. I don't know PRPO. Let's look at PRPO. PRPO, and that is okay. I think okay. This is oncology market. I think there's I think medical can be a good place to be when the market moves down, but I think that this one is too thin. This is a fairly thin stock. I want to look at the weekly chart on it. Yeah, this doesn't look good. Overall, we have a downward trend, even though these spikes here are. These are short squeezes. Okay, so people are shorting the stock heavily, and this is probably not something you want to be in because people are shorting this tremendously. So I want to look at the short interest. Yeah, okay, short interest up 41%, as you can see there. So here's what's happening in this stock. I would avoid this stock because we're seeing these spikes here. These are short squeezes. So I think you want to avoid this. This is not based on the performance of the stock. It's based on the fact that so many people have shorted it. So be very, very careful on PRPO. All right, question on Kate. Thank you so much. Let's look at any hope for GM. I think there is a hope for GM because it's moved off of such a low base, but it is pulling back. And unfortunately, the automobile sector, even though they have record sales, it's just not looking as good. Fortunately, the thing about the automobile sector, as opposed to the the techs and all that stuff, is that it isn't that high. But what I would do on this one, I think I would. It's basically a day before earnings. I think that we're going to see. Um, we're probably going to see some pretty good results from GM. I don't think it's going to move the stock though, based on the current climate. Their sales were up last quarter. They're doing a lot of things right at GM, but the sales alone are not going probably to move the stock up. So here's what I would do. I would kind of consider trimming my position a little bit. Maybe sell half of it. I still like the stock. I really do. But I think it's going to be some rough sledding. I mean, unfortunately, I think it's going to be some rough sledding for GM. I wish it wasn't, but I think that's going to be the case. So that's what I would do, reduce the position. Hello, your thoughts on RBLX? I think this one is probably dead on arrival. This is a tech stock. And it's just, this is not the place to be in the market. Yeah, as you can see, it's just pulled back, and we're kind of just stuck. I mean, unfortunately, yeah, I think this one, if you're still okay on this one and you're down 7% or more, consider selling this one, because this is not the place in the market. As you can see, computer software gaming, it's 170 out of 197 now. That's an issue, because what's happened is the money is moving out of this area of the market into the oil and gas. I kind of just, again, I know I'm probably beating a dead horse here, but I want to show you the rankings, because this is so critical. Let's take a look at one of the ones that is doing well, and this is the shoe apparel, believe it or not, business. This one actually is looking pretty decent. So, if you don't want to go all in on, if you don't want to go all in on things like, if you don't want to go all in on things like gaming, maybe this is a place to look. TJX, I'm not recommending it, but it's now it's number 6th area. So this is actually doing fairly well. This is in the retail segment. It's just about ready to break out of a consolidation base, and it's down a little bit today, but it's probably going to go higher. This might be this might be something that you might want to look at. There was been a lot of buying in this area right now. This is TJ Maxx. It's an off-price apparel company, and it's looking pretty good. So what's happening is that, I don't want to necessarily be with the software. Anything that has software on it right now, I kind of want to move away from it. What I want to move towards is potentially the retailers that are survived, the retailers, and also some of the basic infrastructure kind of companies, the construction companies, the steel companies, those kind of things. Those are what's doing well in the market right now. So that's kind of my take on it right now. All right. So thoughts on a Zoom bear call? Excuse me. Sorry about that. That's not a bad idea. But I think that you're going to get with Zoom, I think you're probably going to do better with a put spread. And right now, earnings are in 28 days. So I really want to wait probably more in towards earnings. But I do think that I think you're onto something here. Definitely. I think you're onto something here, because as you can see, the relative strength is going down. So that is, for a bear trade, that's a good thing. It's not a good thing if you're owning it, but it's a good thing if you want that. So we're liking that. So it's got that overall trend, which is good. Its earnings are basically in 28 days. Okay, so let's take a look. Computer software enterprise. This is one of the hardest hit areas. You see now it's trading at 176 at a 197 in terms of the sectors. It's moved way back. So if we look at that in terms of in terms of something to look at, we can see that, let's get to it. I'm just minimizing some things here that I've got up. Let's see if we can get back to, kind of look where this computer software area is. So we're just gonna look for that particular area. So I'm gonna go down to computer software enterprise, And I'm going to show you how low this sector has fallen. The reason I want concentrating on this is not to beat a dead horse, obviously, but to show you potential bear candidates. Okay, the bear candidates are going to be where they ran up the most. So, Computer Software Enterprise is this group here, and there's quite a few. There's quite a few. There's quite a few in that. As you can see, it just for forever it was just doing this great thing, moving right up. But starting basically in about February, that's when the pullback started, and it looks like we thought we were going to reverse, but we didn't. So this is a good place to look for potential shorts. Here's the list: CRM, that's Salesforce, SAP, Shopify, ServiceNow, and Zoom. So I'm pretty confident this is one of the biggest market cap companies out there, and they're in it. But let's look to take a look. Let's see if CRM might be a potential short too. I believe that they've already gone through earnings though. Yeah, okay. It looks as if, let's look here. Okay, no, we went through earnings. Notice how even though earnings are up, the sales are down. So Zoom definitely is in the top 5 in terms of capitalization in that group, the Computer Software Enterprise group. So it might be a good one. I would recommend doing, if you're looking on the downside, I think you're better off with a bear put spread rather than a call spread, because the put spreads will definitely appreciate better in a falling market. In a falling market. Okay, great. Thoughts on Apple? I have my stop loss set at 126. I bought September. Oh, okay. You're in great. You're absolutely. Oh yeah, Real Madrid. You're doing great. Actually, here's what I would do, Real Madrid. I wouldn't just. What I would consider doing possibly is selling some calls against. Selling some calls. This is a way that you can benefit from a price. Now, what I would consider is selling a 126, a 126 strike call, and this is a way that you could generate a little bit more income. And thanks so much for watching from Germany for me. I really like it when you call into the show. But let me just put out something here, and let's see if I can get a price for you if you were to do it that strategy. I'm just going to go. What I'm doing here right now is I'm just bringing up the NASDAQ option chain for Apple, and I'm going to show you that in just a second here. So I'm going to put that, and it's going to be Apple, AAPL, and there we go. Okay, all right, and let's look at the option chain. All right, let's look at that option chain, and let me bring up that option chain for everybody on the screen. So here we go. Okay, there we go. Okay, so basically this is the NASDAQ site, and I like to use this site. It's free, by the way. If you were going to sell your stock right now, you might want to consider selling a option that will sell it out for you. I wouldn't just sell my stock. What I would do is I would get a little bit extra money. So I would go out here to the April time frame. So let's kind of look at the dates. These are the dates. I would go out here to June, and I would look at the strike price. So 126 is where I would sell this option. You could pick up for each 100 shares that you have. Now I don't know how your shares are, but if you have 100 shares, you might want to consider selling a call option, and this gives people the right to buy the stock for 100 shares from you for $126. But instead of just selling it, you might get some advantage on the downside if Apple continues to move lower. You could get $483 if you did that, just by doing that. So that's a potential option. That's another way. It depends on how you have the shares, though. If you don't have round lots, you really can't do a covered call. But if you have 100 shares, you can. And so, because you have such a low basis at 109, I think you'd be looking very good, a nice profit. That's a way you could possibly get a little bit more profit there. All right, let's look at Plug Play, and this one, Plug Play has unfortunately probably not doing that well either. It's just been a kind of a, it's kind of been a general, it's kind of just been a general sell-off, unfortunately. in the market. So let's bring up plug play. Okay, there we go. And with plug, um, we're looking at this very steep sell-off. Again, this is just not going to be a good area, even though it's energy alternative. It's not nearly as bad as the enterprise software group. It has definitely fallen. And right now, unfortunately, I'm just not liking this chart. The reason I'm not liking this chart, one of the main reasons is this black line here. This is the 200-day moving average, and it looks as if it tried to make a play up here. It got to the 200-day line, and it was rebuffed. So unfortunately, I think this one is going lower. So if you're down more than 7% on this one, I would consider possibly closing your position and do that. Here, another question. Is it a good time to buy Doggy Coin? Well, people have been making a lot of money on Doggy Coin. As a matter of fact, my intern here, who hails from Hawaii, the beautiful state with rainbows and all that kind of stuff, he's doing better in Doggy Coin than I'm doing trading. I'm trading my regular stock. So, tells you, I certainly don't have a patent on knowledge of the market. So, hey, why not take a little bit of money and put it in Doggy Coin? I think it will go up the minute it starts falling. Sell. But I do think that hey, it seems to be working. So who am I to say anything about Doggy Coin? I don't cover it here just because my tools don't really cover crypto that much. The only thing it really covers is GBTC. Okay, GBTC. And Ornstead, do you think it can't go much lower? I mean, look at the chart pattern. Massive support line. Okay. Well, never say never. There may be some support. Look, but if I'm down 7% in this market, I think it's better to be cautious. Sell, preserve your capital, and then let's take a look. There's plenty of opportunity to make money in a falling market. Believe me, there's plenty of opportunity. So that would be my point of view. Remember, you don't want to fall in love with any stock out there because they all are, they all have their good points, but when they're going up, they're making you money, then you're in love with them. When they're going down, you kind of want to kick them to the curb. So I would look to kick more to the curb and find some opportunities, other opportunities. Let's look at PXY, PIXY, PIXY, and shift picks. Provider of employment services. Well, people may be needing a lot of that. So that's probably a good area. I just don't know anything about the stock, to be honest. Let's look at the weekly chart first. You always want to start out with a weekly chart. Gosh, this violates a cardinal rule, unfortunately, that I do when I'm looking for stocks. This has a downward trend on the weekly chart. I would avoid it just out of hand. You just don't want to be buying those. And these little spikes here, these little spike things here, these are short squeezes, okay? These are short squeezes. So I would avoid this one. I don't think this is investable, unfortunately. I wish I was more. I wish I was more good on that. Alibaba. This was such a good stock. A lot of the Chinese stocks have been struggling. This one's now below the 200-day line. So I probably, just based on the technicals, I think the company's good. I mean, look at their sales. I mean, goodness gracious, they're up 46%. They're already huge, and their profits are up. But the problem are the technicals right now. The problem is the technicals. It's not it's not the stock. It's in relationships. It's not you. It's me kind of thing. So I think in this case you want to kind of be careful because the money is flowing out of it, and as you can see, we're below the 200-day line. We're trying desperately to the 50-day line, but it looks like we're falling and we can't get up. So this is its earnings in 9 days. So I would be looking at this one possibly as a bear trade. I would, and I'm going to put bear on BABA. Now, the problem, of course, when you do that is the potential for the short squeeze. That is your potential. But, we have a 9 relative strength and we have a downward pointing line. That's not good. On the weekly chart, it's kind of moving lower. But let's see if we can kind of get an idea of how the options are trading. I'm going to look here to the options. I don't know if there are. Yeah, there are. There are definitely options. Okay, so yeah, we have a lot of options that are wanting to get filled. This might present a very, very good opportunity for a for this may produce a very good opportunity for earnings play on the bear side. So here's the thing on BABA. I would be careful. You know, the best stocks to basically have a bear position in are the former high flyers, and definitely Alibaba falls into this category. I mean, it definitely does. It's been, it was such a winner up to the first of the year, and since then it's just been going bad. And unfortunately, I wish this wasn't the case. I wish I didn't have to say this, but relationships between the U.S. and China are getting worse, not better. Even though they're telling you that they're getting better, they're not. And so this is going to be added pain here. So I think what's going to happen is a lot of people that own BABA are going to say, well, I'd rather have the dollars. I'm going to be a seller. So it's just not. I mean, maybe I'm overreacting here. I hope I'm not, but I just don't think it's going to be good. Okay, question about gold. Well, gold is always good to have, and I wish I had more of it. I have some, believe it or not. Um, I have a fancy gold chain, kind of from the '80s. Sort of like from the '80s. I have this gold chain that I bought in Thailand, and I thought when I bought it, I was so cool. Oh, I was just the guy, the man. And actually, it looks stupid on me, but anyways, it's a big old gold chain, and I bought it in Thailand, and you know, it at the time, gold. This is quite a few years ago. It's 20 years ago. Gold was going, believe it or not, for about 300. It's way up there, but I don't think gold is the commodity that you want to have. I know this is just weird. Why wouldn't you want to have gold? It's the safe haven of safe havens. I don't really think that's true. If you're looking for something to put your money in, if you're absolutely want to total mattress money, I think really the only thing to have it in is cash. Cash. Can you believe that? And right now the best cash out there, unfortunately, is well, goodness gracious, why is that not giving me? I'm having issues with my iPhone. Um, I think cash. So I'm not really a fan of gold, and here's why I'm against gold, at least for right now. One of the best stocks out there for gold mining is a company called KL, but it's trading below its 200-day line. I want to show you that stock. This is a Canadian company that mines gold both in Canada, Australia, and then also I think in Southeast Asia. I'm not sure about that, but as you can see, this relative strength of 8. This is horrible. This is horrible, and as you can see, really since and I was, last year I was in KL, and it was doing great, but this year not so much. So right now, gold, it's not a safe haven. I think really what you got to do is you got to go to the commodity plays. That's where the strength is right now. The commodity plays. Believe it or not, believe it or not, the agricultural fertilizer companies are doing great. I want to show you a chart of Mosaic. It's one of the ones that is in the fertilizer place. Now it came all the way down to the 50-day line, but if you look at this carefully, and it's really hard to see on this chart, it bounced all the way back up to the 10-day line. So this was after earnings. Earnings were up tremendously. This is a fertilizer company. They're up 999%. So you can't get any bigger than that. So the companies that are right now doing very well are these agricultural chemical companies. And this is a strange sector. So I kind of want to show you this sector as well, the agricultural chemicals area. And I'm going to go up and we're going to take a look at that right at this agricultural. Does it have my agricultural chemicals? Let's see if I have this. Let's see if I can get this sorted to the agricultural chemicals there. This is an area that, believe it or not, if I get it right, that's what else. Agricultural chemicals. There, agricultural operations. I guess it's down here. Yeah, it's about down. Yeah, okay. So it's down here at about 41, I think. Agricultural chemicals. Well, I say it was. Goodness gracious. I think, let's just sort it by the rank. I know the rank is about 41. But this is an area that you want to take a look at agricultural chemicals. And here, hopefully I can get this thing to work. Okay, let's go down to 41 here. Yep, there we go. Well, I thought that was agricultural chemicals, but anyways, the agricultural chemicals group, which Mosaic is in, yeah, 41. Okay, so the agricultural chemicals group is doing extremely well. Now there's another one. This is kind of an area. Let's see if I can get it to. Let's see if it'll give me a chart. Well, I don't think it is. Oh goodness. Okay. Well, it's not. It's not giving me. It's not giving me that area. Anyways, so that's where the market is going. So basically, right now, gold. I wouldn't recommend it. I wouldn't really recommend it. All right. How to find in advance? You said, like at what price? Wow, that's a good question. If I had the answer to you, I would be a lot richer than I am. But here's what you got to look for, and I have good charts that I can look for this. What you do is you look for a stock that it has a lot of what they call short interest, and that's really the best way to do it. And I could go into this, but I'm really a little bit pressed for time on how to look for short squeezes. But you want to look at increases in short interest. That's how you want to do it. All right. Is it a good time to buy Palantir? Probably not, unfortunately. Right now, all of the techs are just, it's just, you got, unfortunately, this is really tough. We got to kind of reorient in our thinking, at least for the time being, move away from techs to value, because this is where, the Warren Buffetts of the world are going to win. Now, if you want a good place to kind of plant your flag, where you won't get hurt too much, and as you can see, the Palantir just isn't looking strong. Where you might want to go is Berkshire Hathaway. They're going to do a spare buyback, but BRKB is probably a good place to be right now in the market, because they tend to invest not in techs, but in value-oriented stocks. They're buying a lot of stuff right now. So this is a place that you might want to look at for a stock. Its earnings per share are up 27%, which is amazing considering how big this company is. But as you can see, the relative strength line. So if you want a place to park some money, at least for the time being until this storm is done with, and I don't know when it will be, this is possibly a candidate, is Berkshire Hathaway. It's relative to some of the tech stocks, it's cheap. It's $279.59 a share, which I think is a pretty good deal. Its earnings per share it just came through earnings, and it did quite well. I'm going to be buying this in the small portfolio, and I do think that we're going to see probably some very nice appreciation on this stock, at least in the next few weeks until we get things sorting out. This is the anti-growth stock. This is the stock that basically is against the growth. So I'm going to be probably adding this to the small portfolio after the performance today. It hasn't been good performance. So anyways, this is a question about Palantir. All right. So what about UAMY? Talks about U.S. military. Yeah, the problem with here's the thing right now, buying on rumors like this, you can make a lot of money doing this, but I think really what you got to look for, there's a shift in the market, and this is the thing, there's a shift in the market to the commodity stocks and to to other things. Now, I do like the fact that this is a producer of metals. I do like that area right now, and but again, I'm not a particular fan of this chart. I mean, it's just, yeah, okay, it's selling off. So I would go against this. I would not be I would not be that one. I probably wouldn't do anything with. I'd watch list that one more than likely. J.P. Morgan puts NEO at $70. Well, J.P. Morgan, they have a lot of smart people over there, I have to admit. But I think they might be owning some stock. Yeah, absolutely. I mean, look. They're very smart over there, but I think that what they're doing is J.P. Morgan, I think, in some of its funds has a lot of NEO, and I think they want to unload it, and that's what I think they're telling you, is that yes, it might be 70, but they want to sell it to you at 70. I guarantee you that. So I'd be a little bit careful about that. I'd be a little bit careful about that. Um, you prefer crypto over gold? Well, hey, a lot of people do. The only problem with crypto is that power failure, internet failure, or mistake, poof, it goes away. That's one of the things about crypto. The thing about gold is sort of the ultimate. It's sort of the ultimate. I mean, like everything can burn down. You can have. I mean, the Rothschilds made a fortune on gold in the last 400 years because there's always going to be wars and there's going to be bad governments and communists and all that kind of stuff. They're all going to come at it. And one thing about gold is gold doesn't need electrical supply. It doesn't need ownership documents. It doesn't need blockchain. It just needs physical. Physical. It just needs physical possession. So I have to say, gold is very. Gold is not dependent on really anything. Crypto is. So even though they say blockchain and it's all that great, and it is. I mean, it really is. I think it's an awesome idea, but I think don't underestimate the ability of gold to go through catastrophic situations. I don't think we're there yet. I mean, I don't think we're in catastrophic situations yet. But I think that taxes are going to go up a lot. We're going to see a lot of inflation. We're going to see rents go up. We're not going to see wages go up, though. Unfortunately, that's really what we need to go up is wages. They aren't going to go up, but things like food is going to go up, clothing is going to go up. So retail is going to be good. Steel, mining, forestry products. That's what's going to move back. It's more of a value orientation in the economy. So, a lot of people really like crypto. A lot of people do great with crypto. I'm not one. I've done okay with GBTC, which is Bitcoin, but that's about it. So I'm not as much of a bull on crypto. All right, so we have one last question. Your views on EV space versus in U.S. and China. I think we're moving to EVs, absolutely, no question. But I think that we're going to find very quickly EVs have their place. Absolutely, they do. The real reason for EVs is self-driving cars, I believe, and that's coming. Self-driving cars, self-driving cars. This is an absolute trend that's going to happen. But in the midterm, we're going to be selling EVs to rich people, okay, for the most part. Now, in China, it's true they have a $4,000 EV, and it's sort of like a golf cart with wheels. And those are going to work for a lot of people. I'm not saying they're not. But I think that for many places in the world where they don't have the infrastructure, they don't have the electrical grid, believe it or not, I think that, gasoline cars are going to be around for a while. So I think that, Tesla we're going to hopefully see it's definitely in a leadership position, but I think their stock is basically it's priced to perfection, at least for right now, at least for what I'm seeing. That might change. I don't think they're going to stop Tesla, but I think that the doubles and the triples on EV stocks, I think that's come to an end. And the reason that really the canary in the coal mine for me was Ford. Ford did so poorly. It was amazing. And Ford has a lot of EVs. So I think, we just got to reorient ourselves. We got to reorient ourselves towards old industry stocks. We've got to look at, the value plays in oil. We've got to look at the stocks like Berkshire Hathaway that are basically value oriented. We're seeing a shift. If we get heavy inflation, and I'm old enough to remember heavy inflation, right now there's very little inflation in the world, but inflation is coming. We printed all this money. It's got to go somewhere. And so what's going to happen is as it trickles down to the average person, you're going to see inflation. You're going to see already seeing inflation in housing costs are going up. You're seeing inflation in the gasoline prices are going to go up. And so the stocks that benefit from that is where you're going to want to be. Anyways, thanks everyone. Thank you so much. I've run over my time, but if you want to get on the action trailers, it's super easy to do. Just go to www.Dallas Trading Floor, and if you want to take a look at the bear put spread, that I have out today for for Datadog, which is coming up on earnings, you can go to this site, www.vinny.com/u/Dallas Trading Floor, and you can take a look at it there. So until tomorrow, thank you everybody. Thanks so much for for watching me today, and happy trading. And I hope I hope that we're going to recover from this. So unfortunately, this is a little bit of a shock. I think we'll have a dead cat bounce tomorrow. So don't be surprised if we see the market move up, relatively significantly tomorrow. But we want to start kind of orienting our portfolios, probably away from some of the high tech Nasdaq type stocks and more towards the S&P type of resource stocks like the steels and those kind of things. So until tomorrow, happy trading. Thanks everybody, and I'll be back at 2:30 Central, 3:30